You don't overtrade because you're stupid. You don't overtrade because you're greedy. And you don't overtrade because you don't lack discipline. You overtrade because your brain is uncomfortable with doing nothing. And once you understand this, overtrading becomes very hard to continue. Most traders believe overtrading is a discipline problem. They say, I just need more rules. I just need more self-control. But if discipline alone worked, no trader would overtrade after losing money repeatedly. Yet they do. So the problem is not discipline. It's psychological discomfort. The real reason you overtrade is because waiting feels worse than losing. When price does nothing, when no setup appears, your brain feels tension, silence, uncertainty, boredom. And your brain hates that state. So it looks for relief. Clicking a trade gives instant relief. Even if it's a bad trade, overtrading is not about money. It's about control. Entering a trade makes you feel involved. It makes you feel active. It makes you feel in control. That feeling releases dopamine. Your brain doesn't care if the trade is logical. It only cares that the discomfort stopped. This is why experience alone doesn't stop overtrading. You can understand risk management. You can know your strategy. You can accept losses intellectually and still overtrade. Because knowledge does not calm the nervous system. Professionals trade less. Not because they know more, but because they are comfortable doing nothing. Here's the uncomfortable truth. Most traders don't want consistency. They want engagement. They want action. They want stimulation. They want excitement. The market punishes this personality. Profitable trading is boring, quiet, repetitive. If you can't sit and do nothing, the market will take your money for you. You don't fix overtrading with more rules. You fix it by training boredom tolerance. Decide before the session. If no setup appears, today is a win. Measure success by execution, not profit. Limit your trading window. When time is up, you stop. Waiting is a skill. And like any skill, it must be practiced. Overtrading doesn't disappear. When you try harder, it disappears. When you stop needing action. If you feel the urge to trade, don't ask, is this a good setup? Ask, what discomfort am I trying to escape? Fix that, and overtrading solves itself. Chapter 1. Why your brain hates stillness. Let's go deeper. Your brain was not designed for trading. It was designed for survival. For most of human history, doing nothing meant danger. Silence meant vulnerability. Stillness meant uncertainty. So when you sit in front of a chart and nothing happens, your brain doesn't interpret that as neutral. It interprets it as threat. Not a physical threat, but a psychological one. Uncertainty. And the brain will always choose a bad decision over uncertainty. Because a bad decision feels like movement. Movement feels like control, and control feels safe. This is why waiting feels unbearable. Not because you're weak, but because you're human. Chapter 2. Overtrading as emotional regulation. Most traders think trading is about analysis, but overtrading has nothing to do with analysis. It's emotional regulation. When you feel bored, you trade. When you feel anxious, you trade. When you feel frustrated, you trade. Trading becomes a way to change how you feel, not a way to make money. This is dangerous, because the market doesn't care how you feel. It only reacts to probabilities. And when you trade to fix emotions, you abandon probabilities. You start trading for relief. And relief-seeking behavior always ends the same way. Losses. Chapter 3. Why just be patient never works. People say, just be patient. But patience is not a decision. It's a skill. You don't become patient by telling yourself to wait. You become patient by surviving discomfort without reacting. And most traders never train this. They train indicators. They train strategies. They train entries. But they never train stillness. So the moment the market goes quiet, they panic internally, and panic always demands action. Chapter 4: The Hidden Addiction Nobody Talks About. Here's something nobody wants to admit. Many traders are not addicted to winning. They're addicted to participation. They want to feel involved. They want to feel like they're in the game. Being flat feels like being left out. So they force trades, just to feel included. This is not trading. This is emotional gambling. And the market is extremely efficient at extracting money from people who need stimulation. Chapter 5: Why Losing Traders Trade More. Notice something strange. The worse a trader performs, the more they trade. This seems illogical, but psychologically, it makes perfect sense. Loss creates discomfort. Discomfort demands relief. Trading promises relief. So the trader trades again, and again, and again, until the account is destroyed. Overtrading is not confidence. It's desperation masked as activity. Chapter 6: The Lie of More Opportunity. Traders often say, there are opportunities everywhere, but that's a lie the mind tells when it wants action. Real opportunities are rare. That's why they pay. If opportunities were everywhere, everyone would be profitable. Professional traders wait days, sometimes weeks, for one trade. Retail traders wait minutes. This difference alone explains most results. Chapter 7: The Market Rewards Detachment. The market does not reward effort. It rewards alignment. When you are emotionally detached, you see clearly. When you are attached, you see what you want to see. Overtrading is not taking too many trades. It's being emotionally attached to every movement. Detached traders wait. Attached traders react. The market always punishes reaction. Chapter 8: Boredom is the price of profit. This is the price nobody wants to pay. Boredom. Long periods of nothing, staring at charts, and doing absolutely nothing. No excitement, no stimulation, no dopamine, just waiting. This is not a flaw in trading. This is the cost of entry. If you cannot pay this cost, you will pay with money instead. Chapter 9: Redefining a Good Day. Most traders define a good day as, I made money. This mindset guarantees overtrading. A professional defines a good day as, I followed my process. Even if no trades were taken, especially if no trades were taken. Because restraint is harder than action, and harder skills pay more. Chapter 10: A Simple Mental Shift That Changes Everything. Here's a powerful shift. Stop asking, how can I trade more efficiently? Start asking, how can I need the market less? The less you need it, the clearer you become. The clearer you become, the fewer trades you take. The fewer trades you take, the higher your quality. Chapter 11: The Moment Before You Overtrade. Overtrading doesn't start with a click. It starts seconds before. There is always a moment where you feel restless, impatient, uneasy, slightly uncomfortable. That moment is the real decision point, not the trade. If you can sit through that feeling without reacting, you win, even if you don't make money that day. Chapter 12: Why Time Limits Work. Limiting your trading time is not about discipline. It's about protection. When time is unlimited, emotion expands. When time is limited, you become selective. Professional traders respect time. Overtraders fight it. Chapter 13: The Paradox of Control. Here's the paradox. The more you try to control outcomes, the worse your results. The more you surrender to process, the better your results. Overtrading is an attempt to control randomness. But randomness cannot be controlled. It can only be managed. Chapter 14: Trading is a mirror. The market does not change you. It reveals you. If you're impatient, trading will show it. If you're impulsive, trading will expose it. If you avoid discomfort, trading will punish it. Overtrading is not a trading problem. It's a self-awareness problem. Chapter 15: The Final Reframe. Overtrading is not something you eliminate. It's something you outgrow when you no longer need the market to fix how you feel. When you no longer fear stillness. When boredom no longer threatens you. Overtrading fades naturally, not through force, but through understanding. If you remember one thing from this video, remember this: the urge to trade is rarely about opportunity. It's about discomfort. And the trader who can sit with discomfort without reacting will always outperform the trader who cannot, not because they are smarter, but because they are calmer. And in trading, calm is an edge.